you down with OTC? Down with OTC. OTC. Are you down with OTC? Are you down with OTC? OTC. Are you down with OTC? Down with OTC. Down with OTC.
Oh, welcome to On the Chain. This is Jeff. You are here exclusively on the HODL review. Just checking the microphone settings here. But welcome. It is Saturday morning, 8 a.m. Eastern Standard Time. This is an amazing day because there is so much for us to cover on this monitor. We're going to go into a lot of different topics. We're going to do it quick. We've got an hour and we're going to fly through this because it's crazy. Some of the things that are happening here. We're even going to touch a little bit on the fact that XDC has been blowing up. XRP is at all-time highs this year and really for the past 3 years. But there's so much more that is transpiring in the market. With every ebb and flow of the market, another digital asset kind of takes its spot. And we're going to cover some of those top digital assets that have been making some big movements over the past weeks and the past couple days. But really digging in because as we're looking at it, the financial institutions and retail Mainstreet is now sprinting. I was going to say running, but they're now sprinting to the digital asset crypto space. And we need to cover all of that and so much more right now. Let's go. All right, welcome back. So I want to start off this morning, give a shout out to everybody here. Also, make sure that if you're here right now, you already got your coffee. Make sure you go get that strong, dark, rich, roasted espresso. Today is the Segfredo Day. I think I had it last week as well. This is from the black bag. It's the only, you can only get it at an actual cafe, not available to the retail consumer. They have the red bag. You can buy those online here. But this Segfredo, oh my God, it's just like, it's unbelievable. It's like just really, really amazing flavor. So hang on. Oh, what a great way to start. And again, and some of you guys are drinking Death Wish coffee, another really good quality espresso, dark roasted. Awesome. So, where should we start? I mean, there's so much to go over. And it just seems like sometimes you kind of have to dig in and say, hey, where exactly is this space going? What do we need to really understand from this space? What are we trying to figure out here? And when I look at this and I say, hey, you know what? People are now sprinting. And it's really, really interesting because we just saw the Coinbase listing this past week, and it kind of started off. I don't even want to say to a rocky start because there was some discussion it was going to open at 250, and it ends up opening really in reality by the time you could actually invest in Coinbase, it was already at like 391. So it kind of blew up immediately. And now what we're seeing is ARK Investment, Kathy Wood's group has now bought, and let me pull this up, and I think this is a great spot to start this off. Let me see if I can get the screen shared the way we want to share it. But anyhow, so Kathy Wood is really leading the charge from many perspectives, for many different stocks, many different companies. And now one of the big one for her is Coinbase. So if, I'm not even sharing, I'm looking over here and you guys don't even see what I'm seeing. But if we want to look at Coinbase, so over the past week, she's bought a ton of Coinbase shares. She sold about $99 million worth of Tesla and moved it over to Coinbase. So on Friday, there was a purchase of 187,000 shares of Coinbase. And this brought their total purchase to around $64 million. So it's really impressive when you see, they sold 134,000 shares of Tesla at around 100 million. But still, they hold a lot of Tesla in their portfolios, and they have a couple different ETF portfolios over on ARK Investment. And so you guys can go check it out. If you look up ARK Investments, you can see all the different ETF portfolios they have. But look at this, the Coinbase purchase added to 341,000 shares that they bought on Thursday and 749,000 that they bought on Wednesday. So right now, you're looking at ARK with a large holding of Coinbase. So what is that? They've got over, well over 1 million shares, obviously, because between Thursday and Wednesday, they've already got 1.1 million. And then you add another 180. So they're like 1.2 to 1.3 million shares of Coinbase. So there's someone that believes in the growth, in the direction of this technology. And I'll tell you, somebody else that really, I was a little bit shocked, even though I know he talks about it. I've, brought this person up multiple times in conversation about someone that hypes and FOMOs and FUDs different stocks. But that's none other. We can't open it. Wait a minute. Hopefully I can open it. There we go. None other than Jim Cramer. So forget about the video that's popping up here. But Jim Cramer sold Bitcoin and paid off his mortgage this past week, and that's really huge. Look at all these pop-ups. I want to pull this article up, want to go over it, and they're like, you got to subscribe. You got to subscribe. Could you imagine that Fortune would just participate in Coil or some sort of, streaming micropayment solution? I wouldn't even have to worry about subscribing. I wouldn't get all these horrible pop-ups and these videos and these ads and all this in-your-face stuff that pops up all over the place when you try to look through something. I could have this on the Brave browser and it would probably block all this out. but just for the matter of expediency, we wanted to pull this up. But check this out. So he didn't sell all of it, but he bought about, oh, here we go again. They're going to pop it up. He bought around $500,000 worth of Bitcoin, and sold maybe about half of his holdings in order to pay off his mortgage. So he bought around the $12,000 mark and he sold at the $64,000 mark. It's a real big move. I mean, when you see stuff like this, and it's interesting because this kind of factors back into one of the things that Chip and I talked about the other day, which was in reference to David Schwartz. And David Schwartz he was referencing, if an asset goes down in value, are you losing money? Are you actually losing? And really, you can approach it from different perspectives. But our primary argument with that is that if you don't sell it, then you're not losing. Just like with a stock, if you're not selling the stock and you're holding the stock and you're going through market fluctuation, then in fact, you haven't really lost yet. The value has gone down, but until you sell it and convert it back into a truly spendable asset, then you haven't really lost anything. So if we look at the digital asset space, and there's some conversation we're going to have today. One of the previous Fed chair was saying that Bitcoin is reached its point of being a store of value, but not spendable. And if we look at the digital asset market, my opinion, I'm not spending my digital asset. I'm looking at the beginning stages of this market. And if you want to look at lessons learned, one primary lesson learned would be David Schwartz himself selling his Ethereum in order to buy $40,000 solar panels. Now, here's a guy that was in the space, understood the space. We have no idea what his holdings are. And I was going through the numbers with Chip. I said it's all relative, because if an individual, you throw it out there, let's say someone holds 1 million. Let's say they're holding 1 million units of whatever it is of value. So let's say it was Bitcoin. Let's say it was Ethereum. Let's say it's XRP. But if you have your 1 million and you've sold off 98% of those 1 million over a period of time, and you've captured profits as you've sold those 98% of that 1 million, you've sold 980,000 of them. So from that perspective, you've not 980. Yeah, it would be 980,000. So in essence, let me see. Am I right about that? You'd be left with 1 million. Yeah. So exactly. You'd be left with, if you had 1 million and you had 2% left, you'd be left with 20,000. So you'd sell off 980,000 units and you'd be left with 20,000 units. So think of the valuation. So if from your perspective over time, that the market's appreciating, you're taking money off the table, you're putting it in your pocket because you started out with this big, nest egg that might have really started, at little amounts. So if he has, so 2%, not 20%. Good point. So 2%. 2%, it's still 20,000, jogging my mind here. But if you can imagine, but we don't know if he was holding 1 million. We don't know what he's holding. It's all relative. But the point being is that if somebody had 1 million and they sold off 98% and they capture and they're holding 20,000 BTC right now, that 20,000 BTC is worth around 120 million. If you start out with 100,000 and sold off 98%, you're left with would it be? Let's say you'd had 100,000, you'd be left with 2,000. And if you're 2,000, then it would probably be worth around, I don't know, what someone could calculate that. It would still be worth, if you had 20,000, it would be worth about 1.2 billion, not 120 million. And then if you had 2,000, it would be worth around 120 million. So it's relative. But again, we don't know what the sell-off is, but lessons learned, because from our perspective, if I'm investing and I'm buying as the market's appreciating and I'm looking my gains are not going to be, in the millions and millions and millions. I'm not taking, $500,000 and putting it into Bitcoin. I'm not taking $1 million, or I'm not taking $1 billion and putting it into Bitcoin like Michael Saylor. If I had $1 billion and I made 4.5 billion, if I take $1 billion of it off the table, and it's all relative. Super mathlete. That is not it. Yeah, I don't know if I'm the super mathlete. But the point being is that everybody is going to have their risk tolerance. Everybody is going to also look and say, hey, this is what I'm happy with. So you look at Jim Cramer, and I look at the fact that he invested 500,000 in Bitcoin. His holdings appreciate to whatever it is. He bought at 10,000, so we could do the math, but he essentially sold around $1 million worth of Bitcoin. And he took that 1 million and he paid off his mortgage. A guy like Jim Cramer, he probably doesn't need that, $1 million. He probably has a huge amount of a big salary. He's got all this stock. That $1 million, may or may not have been, super, super significant to his life. I don't know. But if he could take that $1 million he just made and he paid off his home mortgage 100%, that's valid for him. But at the same time, there's lessons to be learned across the board, because you're either in it, for the short term, or you say, hey, you know what, I'm putting this in here and I'm in there. This money I put in, I'm forgetting about it. Investing, I'm buying, I'm forgetting, I'm investing, buying, whatever, I'm forgetting about it. And it's accumulating over time. And then you have your plan and you look out, into the future, whatever that number of years is, whatever the number is, whatever that is that's in your mind, that is what you want. Then you look at, lessons learned on, let's say, like Dogecoin. Someone's bringing up Dogecoin over here, or, if you want to look at, what David Schwartz did with his solar panels when he used Ethereum and he sold it for $40,000 in solar panels. At his point in life, I wouldn't have bought solar panels. I think that's a complete waste of money. Regardless, I don't care where the money comes from. I wouldn't have taken 40,000 and invested in solar panels unless, I'm going 100% off the grid and my whole house is off the grid and that's it. But you're never going to, make that money back. It's going to take eons, to make that kind of money back. You're not going to be in that home that long. It's kind of irrational. But if you know where the space is growing, now that $40,000 worth of ETH is worth, what was it, like 80 million or $90 million? So if you have an idea of the direction the market's going in, why would you sell off and take minimal profits unless that's all your intent was? Like with Dogecoin, I've bought and sold Dogecoin multiple times and I was happy with my hundreds of dollars gains, with my thousands of dollar gains each time I transacted in Doge. And then I look back on this as a lesson learned. Me personally, I try to be, I try to reflect back. I had Doge that I had some extra money sitting in Robinhood, and this goes back a couple years already, and I just put it into Doge, and Doge was like 0.000 something. And so then when all this fiasco started with Robinhood and GameStop, and there's still tension going on right now with Robinhood, where the SEC and others may be still coming after Robinhood. But I looked at Robinhood and I said, you know what? At that moment in time, I said, I need to pull all of my holdings, anything I have on Robinhood, I need to pull off. Now, I had a couple of different, I was playing around with their platform with digital asset. And one of them was Doge. And I said, you know what? I need to get everything off. The problem with Robinhood was that you don't actually own your digital asset that's held on Robinhood. So I couldn't move my digital assets off of Robinhood. I had to sell my digital assets for a realized gain or unrealized gain, whatever it was. And in fact, I just realized this morning I left ETC. I actually had ETC on Robinhood. And that's more than tripled in value from what I had bought it at. And so I'm looking at that. I'm like, holy cow, I could have sold ETC a couple months ago when Robinhood was going through all this stuff with GameStop. And I could have, I would have maybe lost money, made money. I don't know wherever it was at. But the point is, I made money on Doge, but I lost because my intent wasn't to sell it. I was going to hold it. But in order to move off of Robinhood, I was forced to sell it. So I had to sell it. I took my profit. And then now I'm looking at Doge at 35, 40 cents. I'm like, holy crap. I didn't want to sell at 6 cents, but I was forced to because I wanted to move off of Robinhood. Lesson learned. Two lessons learned. One, your digital asset is only yours if it's bought on a valid exchange that allows you to hold your keys to where you can, move your asset. If you can move your asset around freely, it's your asset. If you're buying it on a Robinhood platform and you can't hold it, then in that case, it is what it is. But I like this. So Norseman brings up a good point. Regarding with Doge, where'd you say? It was a to me. Where's this? Is effing up with Dodge? Yeah, the Doge, the Dodge, the Doge. And from my perspective, when I got out of Doge at 5 or 6 cents, I was happy because honestly, I did not think that Doge was going to go any higher. I believe that Doge was reaching its max points at 8 cents. And I'm looking at people investing. I'm shocked. That's why the other night we're looking at Doge. I'm like, holy crap, it's at 35, 40 cents. But I didn't have full faith that it was going to go beyond that, 5 to 10 cents. I really didn't. And here's where it's at. So I was completely satisfied and happy when I sold it. However, I was in a position where I may not have sold. I might, because the money wasn't as relevant that I put in there. I just left it, whatever. But I'm looking for these lessons learned. I'm looking at Jim Cramer over in this article here that sold his Bitcoin, sold half his Bitcoin, but he bought $500,000 worth of Bitcoin. Let's say at 10, so at 500,000, at 10,000, what does that give him? That would be 500. Oh, that would be 500, right? 500. Why is my math not able to calculate this stuff in my brain right now? 500 times 10,000. No, what am I doing? Yeah, I think I'm right. 500 times 10,000 would be 500,000, right? Or am I off? Or is that 5 million? So is that 50? 50 at 10,000. Yeah, because that'd be 50. Yeah, so it'd be 50. So he bought 50 Bitcoin. My brain is all skewed right now with this Mathlete stuff. So yeah, so he bought 50 and he sold and he made a ton of money. So that's great. He took 500,000, 50 Bitcoin at 10, 12,000, maybe a little less. He sells a little bit, takes his profit, pays off his mortgage. He's happy and he's looking, hey, I went from 10,000 to 60,000. That's an awesome gain. Where are you going to get a 6-time growth in your money? He's not getting it in gold. He's not getting it in the stock market. In a short period of time, he's got 6 times growth on his money, and he goes, hey, I'm going to pay off my mortgage. I'm happy with it. But everybody has their strategy. Everybody has what their risk tolerance and what their vision is of where they're going with their investment. Some people want to play around with investment. I think many times it can get dangerous because no one can predict a top and nobody can predict a bottom. And Ronnie, mornings and math don't go well together. I love that. So anyhow, what's that? I need an abacus. We need an abacus. That's right. So anyhow, I don't know. I was just kind of caught up in that whole thought process as I was reading that. But hey, just a quick shout out. XRP shirts. If you go to onthechain.shop, you can actually get some merch that we put there. You got the XRP. I can't be 100% sure, but I think it's magic. Thank you, Tony Frisk. And then if you look at the back of the shirt, you've got the On the Chain logo. We got a bunch of other shirts on there as well. Go check that out on onthechain.shop. You can go check it out. A lot of cool stuff. We'll have some new stuff that's going to be coming out as we kind of progress with that. Just want to give a shout out to our merch store that we put together. All right, so here's another one. Let me see, where are we at? There's so much here. All right, so obviously we saw a little bit of a pullback in the market. I don't know if this is going to be 100% relevant to it, but there's a lot kind of tumbling around in my brain in terms of where the market is going, what kind of things are happening, because I look at, some of these big investment houses. So if you look at the big investment houses, like Rothschild Investments, or many of the others, and you look at what they're doing, and I look and I'm like, holy cow, Rothschild Investment acquired 250,000 shares of Grayscale's ETH trust, and they added around 8,000 shares to its BTC trust holdings, 8,000. Now they've already held, more of that. It says here the firm holds zero ties to the famed Rothschild family dynasty. Whatever. All right. But the key is, it's an investment group. They have 265,000 shares in Grayscale's ETH, according to their filing on April 15th. And then here you have they're up. It's tally 30,000 in January, up to 38,000 this month. These are big numbers, of what they're putting in. That's in their Bitcoin trust. So they have the GBDC, and what is the I forget what the Grayscale letters are for the Ethereum, but it's amazing. I mean, it's just, as you're starting to see this, you see this more and more and more. Yeah, not the Rothschild you think. It's not the same Rothschild. The point is that it's an investment group, and they're buying into Grayscale. They're buying into their trust. That Grayscale, obviously investing in Bitcoin, investing in Ethereum. The markets are trending. The markets are continuously progressing and moving in a specific direction, and that direction is further and further adoption, within this space. So then I look and I'm like, holy cow, we see a little bit of a pullback, and even, I know I'm kind of jumping around on topics here, but even as we kind of look at the development of the market, and right now, let's say, I think in the past hour, almost everything is in the red. Let's see, but not everything, because this is what I find interesting. Let me share this before we get into what I was going to talk about. But if we look at the market, and I think this is really interesting. So we obviously see a pullback. We're on the weekend. There seems to be pullbacks on the weekend. There seems to be, people that are looking to capture and pull some profit off the table. So they want to take profit. They want to kind of ride with house money, whatever, in their investment. Maybe that's sound strategy. I don't know, to each his own, but got to figure that part out. But here you've got, all of them are pulling back. But look at this, to me, and I don't want to talk, resistance levels and all that, but look at where Bitcoin seems to be holding, and like a 7-day growth. XRP with a 56.7% growth, over the past week. And it's impressive. Ethereum at 16%, Bitcoin at 5%. But look at where, all of the assets are reaching a specific level and holding. It's really impressive. So Bitcoin at 60,000, Ethereum now pushing to get to all-time highs, pushing to 2,500, but holding right now. And obviously the market could pull back. Binance Coin, still the one that I'm always shocked and surprised about, at $517 right now. Then we've got XRP at $1.61. But what I wanted to focus in on is, as we have certain assets pulling back, you have others that are growing in the hour, as far as also over the past 7 days. Obviously, Doge at 38%. I don't know. I have no idea where that's going. But Bitcoin Cash at 79%. That one's leading the charge. Litecoin also putting up, big highs at a 41.8% growth. So we have, in the top grouping, you have a little bit of a pullback just in the past hour, and in the past 24 hours. but you have minor changes, like a minor increase in the top four, but then it's just interesting. It's just so interesting to see in the past 24 hours, all of a sudden Bitcoin Cash making a big play, really in the past 7 days, making a big play, and Litecoin as well. Look at these numbers on Litecoin, where others are pulling back and showing small increase. All of a sudden, all these different assets are coming to the game to show up and actually putting up some bigger numbers. It's just really impressive. Now, Stellar it keeps getting pushed down. It came up to the number 10 spot, now back to number 14. These are obviously just market cap driven, so not as significant in terms of the project or anything like that. But Stellar has been holding steady. It's amazing to see where Stellar is. Stellar at one point had exceeded the value of XRP, to the dollar. Obviously now XRP a dollar above, but Stellar holding strong at 60 cents. And this is one that at its low point, when we dropped the whole market down, went to sub 5 cents. So it's really, really interesting to see, the changes and the growth. And then another one that really shocked me this morning, because I haven't looked at it in a while, is Ethereum Classic at $41 right now, $42, up 124%, over the past week, and 41% growth just in the past 24 hours. And this is one, I do believe that it's going to trail, that it's, make it what it is, but it has the name recognition, been around a little bit. It's going to trail in the market, just like Bitcoin Cash, just like some of the others, but it's actually making a play, and it's interesting. It really just it's interesting. Obviously, then when we dig in, we look at XDC. We can look at some of the others. Where's my search? Where's the search here? Okay, there it is. Whoa, shrunk it down a little bit too small. Let's go down. Let's go to XDC real quick and take a look at this one. So the XDC, it's probably around, it's still at 11 cents, holding firm. This is another one. This one is growing and just reaching a spot where it just seems to be holding strong, with XDC, and that's kind of impressive to see that kind of growth. But as it's pulling back, as others in the market are pulling back, you see other assets seem to step in and kind of take over. So New Jack Johnson, VeChain is so insane right now. It's a daily Christmas surprise to look at the crypto market. What a nice hobby. I'm in heaven. It is amazing. It really, really is amazing. So blockchain backer called Ethereum Classic 2. That's interesting. Yep, it's really great. So what do you say? Blockchain backer was calling ETC a couple weeks ago, and look where it's at. It's blowing up. It really is. Yep. Gamer for life. Not having unity and cohesion will only harm yourselves. United force in words and deeds will always be victorious. Nice statement. So, all right, what else we got here? Let me look at what you guys are throwing here. Bombard them with requests. They'll get fed up with the mail and do something just so they can. I don't know what I kind of missed your conversation. I missed a point. Obviously, you guys are talking about something. So let's see. Let me scroll back up here. Oh, here we go. Here we go. Finally, guys, write your congressmen and senators to rein in the corrupt SEC. SEC has declared war on the crypto community. Do everything legal to expose them and bring them down. I think, it's interesting, Gamer for Life. You bring up a really, really solid point in terms of, where the SEC is, because SEC obviously, not there to support and protect the retail investor. Obviously, they have ulterior motive. Obviously, they're going to go with the flow of whatever the government administration or even beyond, because sometimes they're acting outside of what the administration is calling for. They're not operating in that direction. They're operating on their own ideas, so to speak. So, but we should be reining this in We should be reaching out to our congressional representatives. We should be hounding our congressional representatives on a regular basis, because you can't have one agency within government running amok, running contrary to the purpose of that agency, to the point where the SEC now is going after companies and investigating companies that may or may not be abiding, by certain policies, policy decisions of a current administration based on carbon, carbon credits, based on um, their philosophies or stance on global warming or climate change, or however you want to spin it. The SEC has no part and place in having any kind of environmental type discussion. The SEC's only role should be to help provide a path and abide by the regulation that is in law. And they should hold companies to that standard of what is in law on the books. So to Gamer for Life's point, without having regulatory clarity coming from Congress in this space, when there's some confusion, allows the SEC to completely run amok and do what they want to do. So that's where it becomes super problematic. So you have our government agencies need to get on the same page, and that's almost impossible, extremely, extremely impossible to get them all on the same page, mainly because they operate almost in their own little silos. They operate in their own little worlds, and they really should be on the same page. Now, if you want to rein in the SEC, that means that we need to have Warren Davidson and Darren Soto pass the Token Taxonomy Act. It needs to get in front of the Financial Services Committee, and we need the Financial Services Committee to get on board and understand the significance of this space and to pass the Token Taxonomy Act. We need to pass clarity of the space, and we don't want over regulation. Regulation doesn't mean that's a positive. It's not a net positive. Many times regulation is a net negative, especially if it's not functioning, to provide clarity needed for growth. Sometimes regulation is put there strictly from a political perspective or as a money grab. Think about carbon credits. Carbon credits are strictly 100% a money grab by a government agency to do what? What are you going to do with carbon credits? Nothing. So if you look at, like, in Europe, for years, you've had voluntary carbon credits. Why in the world would you voluntarily pay a tax for something that does nothing? It does nothing but put money into the government coffers to do whatever they want. Now, if they said, hey, for this carbon credit, for all these taxes that are in this pool of carbon credit, let's call it, we're going to take it and invest it back into infrastructure. We're going to invest it into modernizing roads, but only this money is going to be used, or this money will only be used for that project. But that's not what happens. So what happens is that it's a money grab. So regulation, in many cases, all it is a money grab, and it impedes the growth of business, not because, there's some government concern that this regulation is going to be beneficial to something. It's just it's a penalty. So we have to be very, very cognizant and careful, over something like this, over what could happen within regulation. But the SEC doesn't create the regulation. The SEC can only work within the confines of what the law gives them, and they can then rule and bring case against a company for infringing on the laws that are on the books. So that's where, with this case, my opinion, and I'm not a lawyer, but I'm not looking at this necessarily, from that perspective, but I look at it just from a business perspective. The SEC case against Ripple is critical, because as you bring that case against Ripple and it gets settled in court, it does create precedent in the court system, because we have a lack of law being written, in Congress. So when you have the Bitcom of the world, or those within Congress not understanding, what this digital asset space represents, and they would prefer to crush it and crush those that are earning money in this space, rather than embrace it and try to build on it, then that regulation is extremely penalizing. And so, and it's such an in-depth conversation as this all unfolds, and we're all so passionate about the digital asset space, obviously from an investment perspective, but there are those in our space that have this idea in their brain and they're like, maybe we should build something in this space. Maybe it's not just enough to invest in the space. Maybe we want to create something in the space. Maybe someone has an amazing idea and they're spinning it into something right now and writing it, and and they're going to now build in this space. But could you imagine if you're being penalized by the government to even put that thought onto paper and to actually create that business? And when you realize that it's almost going to be, it'd be impossible, let's say, to start that business in the US, then that means you're going to have to open that business in another country. And as other countries are more friendly, to this space, that's where business is going to go. But then you're going to penalize the growth of ideas by those that will not be able to go to another country to start their business or their idea. I mean, it gets so in depth, and it's the government just is not on board with this at this point in time. And that's where it becomes really, really critical. Gamer, for life is bringing that up, very, very succinctly. So, but look at, Kelly Slade, Maxine Waters needs to go, or she needs to take a class on blockchain. It's too late. Even, how is she going to take a class? What is she, like 98 years old? She doesn't know how to use her cell phone, doesn't know how to text, refers to Bitcoin as Bitcom. I don't know if their mindset has changed now, but not that long ago, they were still referencing, even like Janet Yellen, referencing digital asset as something being utilized for nefarious purposes. And then you have that one blockchain association group, I forget which one it was. They brought in an ex-CIA director that said, no, in fact, fiat is used for a more nefarious purpose. And in fact, the digital asset space isn't. Because we went through that thread on Thursday, or I think it was Thursday or before that, but there's all these, the feedback and the ideas that come out of it, because it's ridiculous. It's like, oh, I didn't, someone had said, oh, I didn't realize that criminals like to pay high fees when they move their money, and they like long wait times to get their money and to move their money. I mean, it's BS, right? Could you imagine, moving Bitcoin, and, Bitcoin leaves a trail. Maybe if you're using a privacy coin, maybe if Iran spins up, their own asset, or China has their digital yuan, and maybe they have a private digital representation of the yuan, but who cares? Digital yuan, the government, is going to move it. The government is going to be the biggest infringer of using their asset for nefarious purpose, whether it's to circumvent certain agreed on international standards, or it's to be utilized to penalize the people. So let's look at it for what it really is, because when you get to this level, what are they really looking at? Are they looking at the benefit of the cryptocurrency decentralized space as how it could benefit the people and help people, bank themselves, help people join the economy, help people join their local economy, their regional economy, their global economy? Or are these nation states looking at the digital currency as a means of circumventing international global standard, and then taking advantage of and penalizing their people, the citizens of their countries, the citizens of the world? Are they looking at regional domination, global domination? Are they looking to topple the currencies of other nations? Are they looking to replace the currencies of other nations? So, this is when you really have to get in and look at things, from a much different perspective. Crypto Novice Kim, what's going on? Great to see you here. Glad you made it, even though you're a little bit late, but always awesome to see you on. So, thanks for being here. So here, yeah, this is perfect because New Jack Johnson brought it up, and this was I actually had this one. Where is it? Here it is. So I had this article up, and I do want to get into this because this reflects back into exactly what we're talking about right now. So the Turkish government banned the pay with cryptocurrency, banned it. So here's a country that is struggling with inflation. They're struggling with confidence of the citizens in their banking system, just like in Venezuela with their millions of percent inflation. Just like in Lebanon with the run on banks and the issues that they have with the banking structure, right up to the level of their central bank and individuals that work there, and so on and on and on. Right. So here, one of the countries that started the ban, yes, it's probably a sign of their own financial struggle. That's exactly what it is, 100%, because their fear is a run on banks. If you are able to use digital asset in a country like Turkey or Lebanon or Venezuela or many of the other countries like that at this point in time, when their currency is plummeting, then the fear is that there's going to be a drastic run on banks. And that means that everyone takes their money out of the bank, puts it into crypto. Because why? They can see that the stability is there in the crypto space. Bitcoin, even if Bitcoin depreciates by 20%, it's better. That 20% depreciation is better than the hundreds of percent depreciation of their own native currency. So this is exactly why people are fleeing there. So in this case, it's 100% a power struggle. Same thing in India. India, the government there battling, with their own internal strife of corruption in the political infrastructure, is battling with their own central bank as to whether or not the digital asset space is going to be permissible or not. But if you look at Turkey, I mean, this is really, really interesting. I'm so glad you brought that up, because if we look at Turkey here, it is 100%. Now, it's interesting because according to Reuters, now there's a Reuters article, fake news, as soon as you get into Reuters, just like the New York Times, that, it's like tabloid journalism. The New York Times never, they might put a lot of articles in there, but I was an undergrad back in the early 90s. And, that dates me a little bit, I guess, but early 90s in undergrad. And, and from there, one of our my classes required us to read the New York Times. We had to get a subscription to the New York Times in order to do whatever we had to do in our class with these articles, all politically related. But it was from that moment in time, I can remember reading, I said, this news is garbage. And this is back then. Yeah, and that was like the standard, like, oh, the New York Times said it, so it must have been a standard. But the news was garbage back then. It's definitely garbage now. But you have to turn, when you look at news sources, you have to look at all news sources. And it's interesting because I read news from all over the place. So I dig in. I want to see, once you can look at perspective. So you want to look at what's going on in Turkey. Now you look at the article title, Bitcoin tumbles more than 4% after Turkey bans crypto payments. Now, was the Bitcoin pullback? I don't know. I don't know if we can refer to that as tumbling. Bitcoin pulled back, others moved up. The market is in flux. Did what happened in Turkey impact Bitcoin? I don't think so. I don't think what happened in Turkey had any bearing on what's going on with Bitcoin. It might have had a minor impact because it's just some reactionary. But I believe that the ban on crypto in Turkey is going to embolden individuals to put their money into Bitcoin and other assets. Because like New Jack Johnson is saying, this is representative, or it's a representation of the government in Turkey very, very concerned about what's happening right now with their own currency and their own economy. And so is this related? I think it's going to be the exact opposite. So here, the Bitcoin was down 4.6% at 60,000 after the ban. I don't know. I honestly, most people in this space that are investing in Bitcoin, you think Jim Cramer is looking at whether or not he's going to buy Bitcoin based on what Turkey's doing? But are people in Turkey then going to say, I'm not putting my money in Bitcoin? They're like, hell with that. I'm going to find every way I can to put my money into Bitcoin, because the government's saying that it's banned. So that's exactly where I'm putting my money, because otherwise they know exactly what's going to happen. They're going to find a way around what they might not be able to spend it. Maybe they will. They'll figure it out. Can the government shut them down if they're functioning with a VPN and trying to find a way around the government suppression? Because that's exactly what it is. And this is exactly, what you have to be aware of. This is what you have to look out for, because this is where the governments are not concerned about the well-being of their people. They're not really worried about their economy, and their financial state was already not stable. Are they trying to achieve stability by banning the crypto asset? They weren't stable before. What makes them think if they ban the digital asset that they're now going to be stable moving forward? It's a crazy conversation, for them to even to dwell into. And somebody else here said it's all about the taxes. It's all about the control. Gokin says the ban of Turkey, it's about taxes. Yes, they want their money. They want to make sure that they're not able to, or they want to make sure that they can continue to manipulate their people and make sure that the people are relatively limited in what their overall beneficial outcome of their life is. So if you're not able to take control of your own finances, if you're not able to take control of your own investment, if you have concern that your money that's held in a bank is going to devalue at a rapid rate, then what does that say about your confidence in your government? So very similar to what's going on and what could happen in the US as an example. So if we look at the US economy and the printing of money that is absolutely out of control. There was another great article about that, but it was all about the Fed involved with the government printing money at an absurd rate. It's printing way too quick, and this then can lead to a significant devaluation of the currency and a rapid inflation. So there's already concern about inflation. There's concern in people, whether they're spreading the FUD, not spreading the FUD. I don't know. I don't know exactly. Nobody has the magic ball, but you can look at everything that's happening. Now, where would you want to be? Where are people going to go if there's a significant economic downturn or pullback? There's certain stocks within the market that will continue to appreciate and move forward and will hold their value. And whether there's a pullback now or a year from now, if you go forward into the future, those stocks will then appreciate again. But the crypto space is very symbolic and will be very much tied to the market fluctuations as we're seeing. So here's someone, Susie Orman, thinks that a market crash could be imminent, but this is her philosophy. This is her perspective. Many are saying that it could be imminent, a market crash. Are all the indicators there? Are people now investing their money? Are companies building at an exponential rate? But is this, market crash coming mainly because it's coming, or is it coming because big financial individuals that are putting their credibility on? I don't want to say putting their credibility on the line. They're bringing their star, quote unquote, star status by spreading FUD about a market, which then creates a self-fulfilling prophecy. Very similar to the whole point, going back to the beginning, talking about David Schwartz with his commentary that, you should be selling and you're losing money if the market goes down. Then, is he then using his quote unquote star status in a dangerous way to where he could detrimentally influence or impact the market, whether it's XRP or other aspects of the market? Because people look at him, and we already saw it in on Twitter and on YouTube. People already reading into his commentary, saying that he's passing along some secret message based on what his knowledge of what's going to happen in the industry. But he doesn't necessarily have, some crystal ball to understand what's going to happen next. Does he understand what the impact of Turkey's new regulatory stance is against Bitcoin? Does he know how the world's going to react? Does he know what the next thing is going to happen? So nobody knows. Nobody understands exactly. So, and I think that is probably the most important aspect, that you have to be very, very careful when you are in a specific position, like a David Schwartz, like a Jim Cramer, like a Susie Orman, to come out and say things that could be interpreted a certain way, and then people then read into it and believe that this individual has some, preconceived a notion because of information that they're privy to where they then understand exactly what's going to happen, when in fact they probably don't. So it's just you have to really, I guess, continue based on your own risk tolerance. That's why they say, go back and do your own research. Hey, that's great. Your research is involved in listening to a lot of different people. But then at the end of the day, any dollar that you put in is your money. You decide when you want to buy something. You decide when you want to sell it. But you have to be very careful, to watch how these types of individuals are potentially impacting the market, for the good or for the bad. It's just kind of crazy, So let's see here. Some of these articles I had pulled up are not so relevant. So anyhow, here's something that I thought was interesting, just to pull it up here, because this is following a trend. Squarespace now filing for direct listing on NICE. Coinbase was a direct listing. Palantir, direct listing. Spotify was a direct listing. Airbnb was a direct listing. Direct listing is a nice way of getting your stock out to market without going to the banks first and allowing the banks to buy X amount of shares ahead of time before retail, so that the banks make that first big boom in the market. Typically, then the private holders of the stock are able to sell their shares. Sometimes there's a holding period, but that direct listing comes directly to retail. But we saw with Coinbase, you don't go from 250 to 391 in a split second. I mean, you do, but that's this type of stuff that could potentially happen. Then but anyhow, so Squarespace getting ready to do a direct listing. At least they applied for it. I think that's things we got to look at in the tech space, as the markets kind of build and grow and all that other good stuff. Hey, quick shout out to XRP Trust. Appreciate the support. Another big shout out to the on the chain merch store. XRP, can't be 100% sure, but I think it's magic. We have a number of different types of designs. I've got others that are coming. It's nice quality shirt too. That was like the number one thing. We had to test it out first and see what the quality of the shirts were before we even would bring it up. But if you're looking for something cool, we do have a me shirt that should be coming out pretty soon. And as always, make sure, if you got brand new here, make sure you hit the subscribe button. That way you're subscribed, you get notified every time we go live here on the chain. Hit the bell notifier, because that's actually what notifies you to our live streams. We do stream live Sunday through Thursday at 8 p.m. Eastern Standard Time, and every single Saturday morning at 8 a.m. Eastern Standard Time. We are inclusive. We want to make sure we reach out to everybody all over the world. We have our subscribers are the best subscribers in the space. We believe in quality, not quantity. Our subscribers are the best, highest quality, highest caliber people in YouTube coming here to gather here on the chain, in the on the chain community. We do have another virtual meetup that we are planning. We were hoping to plan it for the end of April. We got to go through our schedule, make sure that's still doable. If not, expect the next virtual meetup to be the beginning of May. I can't believe it's May already. But with that, check us out again tomorrow night right here on the chain for the roundtable with myself and co-host Chip. Until then, have a great weekend, and I will check you out on the next one. Let's go.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.